The Canadian housing super bubble is bursting, and we're going to go across the major markets now and take a look at the data for August. Very interesting stuff that has happened here, and you're going to notice a running theme across different cities with entirely different economies, which is what I want to highlight here. So Vancouver home sales fall 17% in August despite interest rate cuts, real estate board says. So obviously those rate cuts that the real estate boards and everybody in the real estate industry was saying was just going to be boom, off to the moon. That didn't happen at all, obviously. So Greater Vancouver realtors say home sales fell and they dropped 17.1% in August from a year earlier and were more than a quarter below the 10-year seasonal average. The real estate board says that sales in the market totaled 1,904 last month, down from 2,296 recorded in August 2023. The composite benchmark price for all residential properties in Metro Vancouver was 0.9% decrease over August 2023. So obviously very interesting. You've only got to think about what inflation has been in actual reality terms, not in the CPI, to realize that people are losing in Vancouver on their real estate. And obviously when you look at the amount of new listings, there were 4,109 new listings in August, which was 4.2% more than the same month last year. You know, when you look at the sales, that's nearly double the amount of listings than sales. So that shows the type of market that's going on. But it's even worse in Toronto, where the money laundering isn't as bad. So the Toronto area home sales decline in August, but rate cut could spur activity, says board. So the Toronto Real Estate Board says home sales in August fell from last year as average home price is edged lower. The board said there were 4,970 homes sold in August in the Greater Toronto area, a 5.3% drop compared with the 5,251 homes sold in the same month a year earlier. Sales were up 0.6% from July on a seasonally adjusted basis. I wouldn't really worry about that too much. So the average selling price was down 0.8% compared with August 2023. The composite benchmark price, which aims to represent typical homes, was down 4.6% year over year. New listings, though, get this, in August totaled 12,547, up 1.5% from last year. You don't have to be a rocket scientist to work out that this number here, the amount of new listings compared to the home sales, is going to lead to more weakening in prices. I mean, that doesn't sound like a market that's suddenly about to perk up. And you've also got the biggest bubble in Canada that has been, you know, the shining bright star that everybody's been looking at for the past couple of years. Calgary home sales declined 20% in August from last year as prices rise. I've been talking about this a little bit on prior videos, saying that it looked like the Calgary housing market had topped out, and especially when you look at the rental listings, we're going to get onto that, and all the speculation that has gone on in Calgary. It's just happened later, but the same thing as Toronto and Vancouver. There's been so much hysteria surrounding Calgary. It's been absolutely hilarious. So the Calgary Real Estate Board says August home sales dropped 19.5% from last year's record levels as activity continues to move away from the extreme sellers market conditions seen in the spring. A total of 2,186 properties changed hands last month, down from 2,716 in the same month last year. The board says the benchmark price across all home types was 601,000 for August, slightly lower than the previous month, but 6.3% higher than August 2023. And I would argue that that's about inflation. So when you're talking about in real terms, probably actually flat. Alberta has been seeing one of the higher inflation rates of all the provinces in Canada because of the amount of people moving there and the fact that there's no economy to actually back that up at all. In fact, Alberta has one of the weakest economies and has had stagnant wages now for literally a decade. So obviously not the place of a booming economy like the government tried to tell people. There were 3,536 new listings on the market in August, 13% more than a year earlier. So listings up, and when you look at listings compared to sales. Again, you can just tell where the market is heading likely right now. So the board says August inventory levels reach 4,487 units, a 37% gain from last year, but still nearly 1/4 lower than the long-term trends for the month. So the market topping out, and it's mostly been driven by investors, and that's what's worth noting, with unfortunately a lot of first-time home buyers who've been caught in this as collateral damage. But we're going to get into exactly what has been going on with the speculation in Calgary, because quite frankly, it is insane, and you can just see it on this chart. So basically, it was around 2023 when the amount of rental listings bottomed out in May. So you had just under 3,000 rental listings that were on the Calgary rental market. Since then, it has absolutely exploded, as you can see on this chart, and it is over doubled now. So you've got double the amount of rental listings in about 18 months. So just wild speculation has gone on in Calgary of people buying rental properties that has essentially spurred on the market, made it look like the market, hey, is going great. But another thing that is just showing a warning sign to all investors essentially, and they ain't gonna look at this. All the investors that are coming are the dumb investors that are coming from British Columbia and Ontario. They're the ones that do this type of thing for a living, and since the markets have been in decline in those places, they've had to move to the only markets that are still going up, which was Calgary, Edmonton, Montreal, Halifax, Quebec City, have all been the epicenters of the remaining bubbles. It's no different to the stock market when everybody starts to move away from like the Magnificent Seven, and then they start to go into riskier and riskier things until it all blows up. And generally the people who go into those riskier and riskier things are unfortunately the dumb money. They're the dumb money investors. So, and as you can see from this chart, it's not looking good for them. So when you look at nominal rent prices year over year, they are actually down. Yes, they are actually down. So when you think housing prices are up, property taxes are up, home maintenance is up, housing insurance is up. When you look at Calgary, the hailstorm that's recently passed, you know, home insurance is going to skyrocket in some communities in Calgary. I know one of my old buddies, he actually made a claim during the hailstorm in 2020, and his home insurance over doubled. It went up to nearly $550 per month for a single family home. They build the homes like absolute garbage in Calgary with, you know, 0.3 millimeter thick vinyl plastic covering the outside, just totally not built to sustain the environment there. But anyway, the fact that rental prices are going down and year over year are down is just so bad. I mean, that shows now where this is going as an investment. And obviously what's going to happen as you see the real estate market slow more and more and more, well, what you're going to see is exactly like we've seen in prior cycles in Alberta. People can't sell for what they want or what they need because guess what? They bought at the top of the bubble. What do? They list it for rent. But of course, everybody else is doing the same thing. And then the rental listings skyrocket. We know that isn't the case yet because the housing market was particularly strong this spring and was particularly strong last year, but you've still seen no rental growth, even though the inventory has been skyrocketing for the rental market. It's mostly been driven by the speculation that's easy to see in the numbers. So if you check out the data from the real estate board in Calgary, you can see here that home sales now are actually going back to August 2022 levels. So you're around those August 2022 levels, and they're nothing like you had in 2023, down 20%. The active listings here, so this is the amount of inventory, is nearly back to 2022 levels. So that kind of looks like you had a bottom there in 2023 in terms of inventory. So it looks like the market could be on the turn. Obviously, nothing happens in a straight line, and I'm not the person to ignore a massive trend like you've seen for the past couple of years and the hysteria and the bubble that can definitely keep things going when a market is going against all fundamentals like a market in Calgary, it is still particularly hard to see the top. And that the only way to really look at it is looking at it through the data. So it's interesting what's going on. We'll continue to monitor what happens with prices. Obviously, people are constantly focused on Alberta, and it's become a big focal point for the housing market because, like I said, it's been one of the shining stars. There's been a lot of hysteria around it. The province has drummed up the moving to Alberta to basically paper over the fact that the economy is totally garbage in Alberta and there's been absolutely no wage growth, and nobody asked for that advertising campaign either that was paid for by taxpayer funds. And what's really interesting is I constantly use that as an example as why the Conservatives coming into the federal election aren't going to do anything. Just look at the Conservatives in Alberta. First chance they get to paper over the poor economy, import as much people as possible, and nobody asked for that. So when you look at Canadian average home prices, they haven't done anything, guys. They are down since 2022 when the rate hikes started, and they haven't done anything. We've constantly heard this narrative that home prices are going to rip higher when they cut rates, but people aren't thinking about the consequences of what's happening with the economy, what's happening with the unemployment rate, productivity, everything like that. So you have to take that into consideration. And when you look at the data, this bubble is still bursting and has a long way to go. And we're only just getting into the real nasty part of the cycle right now, which is going to be the fear stage. So we'll continue to monitor this closely over the next couple of months. So anyway, guys, if you've enjoyed this video, I'd highly recommend that you check out this video here. And if you're looking for a VPN to protect your privacy, go to expressvpn.com/marketmania, affiliate link in the description. I will see you in the next one. Take care, guys. Bye-bye.